BSE Sensex is down 0.19% at 65,658 levels. It has touched an intraday low of 65,482 levels. Sensex Nifty on the other hand is down 0.18% at this is from 9:40 in the morning. Currently it is down about 0.18% at 19,491 levels. Now the broader markets also have witnessed some sell-off. Nifty mid cap 100 is down marginally, and Nifty small cap 100 is also down about 0.31%. Now the sell-off primarily is on the back of sell-off in global equities. In yesterday's session, Nasdaq witnessed its biggest fall since February of this year, falling about 2%, and Germany's DAX was down about 1.36%. FTSE 100 was down about 1.36%, and Asian markets also opened lower. Now, the biggest factor is, of course, Fitch's downgrade of US credit rating.
I was about to come to that. So, Fitch downgrading US credit rating is resulting in a massive sell-off in Asian markets, affecting Indian markets,
developed markets, so markets across Europe, in US and Asian markets. Domestic equities also are seeing a massive sell-off, and as you can see the impact of it in the domestic markets, with Nifty and Sensex posting losses for the third consecutive session. Also there were some earning misses for the quarter, and the macro numbers that are coming out, although they have been on an expansionary path, they have seen easing, as the manufacturing PMI came out just a couple of days back, services PMI which is due today, and there has been some earning misses, and demand really, Shweta, has not picked up, which we saw from the numbers of FMCG companies. The recovery in rural demand has not been as quick as the expectations were. So, and also foreign institutional investors have been selling Indian equities over the last 1 week or so. So the markets were already, looking for a signal for profit booking, and it seems like the Fitch credit rating has acted as a catalyst for that profit booking.
All right, let's quickly get into the conversation. Mohit Gang, who is the CEO of Moneyfront, also with us this morning. Mohit, thanks and appreciate you taking time out. I want to begin by understanding from you, do you really agree with what Suyash has to say here? Are those the cues, or is there more to it apart from Fitch rating and lower or perhaps slower consumption and demand as opposed to what was expected?
Hi, morning Shweta. So look, I think Suyash has correctly brought out the points which are weighing down on the global economy per se. I think a US rating downgrade by Fitch is a big news, honestly. Though it's not the first time the US paper has got downgraded. S&P has done that before, I think almost 2-3 years before, where they downgraded US from a AAA to a AA plus kind of an economy, and it was mostly expected. However, the timing has come out of the blue for the global markets, and I think the markets have reacted. Though to be very honest, Shweta, I think the way Indian markets have rallied, honestly, a 2-3% kind of a correction is nothing. It's like a flash in the pan. Markets are perhaps kind of forming a base. I would have to maybe point out one more reason out here, which is that the result season has been a little mixed. Right, so there has been some downgrades which have happened, and there are some unexpected results which have not met analyst expectations, so on and so forth. However, the strong resilience of the economy, the flows, which is domestic flows per se, and the underlying numbers, you've seen the GST numbers coming a couple of days back, and those are as strong as it could be, right? So I think the underlying economic current is absolutely strong and steady to my mind. The global jolt is what it has come out, but I don't think so it warrants like a significant action as of now in the market.
All right, no significant action warranted. Yes,
Mohit, the sell-off because of the Fitch downgrade, have the impact already been absorbed in the prices, or do you see more sell-off for the Indian market specifically?
Look, Suyash, I think it is to be seen now how the bond yields react. And honestly, I think those are perhaps the lead indicators of any economic parameter, and also the lead indicators of how the stock markets will react. So if you see the US 10-year Treasury yield, it's quoting at almost 4.11, 4.18 levels, which are like an all-time high kind of a level. And I think last seen around 2007-8 maybe. And so the US Treasury yield has shot up dramatically. The US 2-year yield is at around 4.88, but the US 30-year paper is still quoting at around 4.1 or 4.2, right? So almost identical to what a US 10-year paper is quoting. Now, if the yields in US persist above the 4% level for a fairly long while, and US were to further raise rates, then there'll be no chance. But India also will have to follow suit, and to stop the outflow of money, perhaps the central bank will have to raise rates, and which is what the market is fearing. If you see the Indian 10-year yield, it has touched a low of almost 6.9 and is now back to almost 7.2 levels as I'm talking to you, which is indicating a course correction in the yields, and which is also indicating that market is perhaps anticipating that the central bank in India might also be pushed to increase the rates. And that is what is weighing down the markets, because that can be disastrous if that were to come, honestly. So I think that's the big thing. Though oil price and other things, the commodity prices are more or less stable. The inflation is again spiraling up in the country on the food, per se on the food inflation I'm talking about, right? So I think those are few things which one will have to keep a track of. Monsoon has been a pretty uneven monsoon. It's good in some patches, but it's extremely bad in other patches, right? So it's a mixed kind of a thing right now, and we don't know which way this entire thing will turn up. If the yields keep going up, if the RBI is pushed to the brink to raise rates, then I think it can mean a slight bit of course correction. But as of now, to my mind, honestly, I think it is a healthy correction which is coming.
All right, a healthy correction that has come in. Also, let's quickly touch upon some of the results that are expected today and the results that came out as of yesterday. A significant result, perhaps, that we could not touch upon yesterday was Interglobe Aviation. Indigo results. How were the results like?
Shweta, Indigo results positively surprises streets, and actually Indigo posted the highest ever quarterly net profit. If we could pull up the numbers over here. So Indigo in the first quarter of FY23 had a loss of about 1064 crores. Now it has reported the highest ever quarterly profit of just under 3100 crores. It is a more than threefold jump from on a sequential basis. So that is from fourth quarter of FY23. Now revenue also jumped almost 30% from 12,855 crores to 16,830 683 crores. EBITDA, which is earnings before interest, tax, depreciation, amortization and rent, was up 626% from 717 crores to 5,211 crores. Now the big beat was due to various factors, one of which was the air traffic. We saw higher demand for air travels. The passenger lower traffic was factor was higher. Oil prices have largely remained range bound. The competition has been weak of late, as we know, the case with Go First and Jetways also being in hot water. INR has been stable, but one of the concerns that the company has raised is of the yields. Now yields has declined on a quarter on quarter basis, and the company expect the yields to be under pressure, going forward in the next quarter, and because of which the company could post a net loss in the upcoming quarter. So that could be a big overhang for the company and for the stock.
All right, let's also get Mohit to join in on this conversation. Mohit, good numbers there for Interglobe Aviation, surprising the market, also on the back of the fact that competition has sort of weakened. We continue to track how, Jet is not coming back. Go First went down. This was the same period. We're talking about the first quarter of financial year. Was the time when Indigo gained a massive share of the subscription, or the flyers pie, as we would like to call it, and it has augured well for them.
Oh, absolutely. I think Indigo is at the right place in the right time. I think, look, the airline industry in India is a duopoly kind of a situation right now, right? There are no big competitors or listed competitors per se as of now, plus the ambitions of Indigo in terms of going global and adding more fleet and so on and so forth has actually augured well. I think what has helped in this positive result is the oil price thing. I think the profitability which has increased, a bulk of it comes from the reduction in oil prices. And I think if the crude basket remains at where it is, or if it goes down further, then I'll not be surprised to see even better results from Indigo going forward. However, crude can be a shocker, and if the prices were to go up, then obviously it'll have a bearing big time on the Indigo numbers. But I think numbers are absolutely healthy and fantastic numbers in terms of revenue growth and EBITDA growth. However, look, I think the stock has reacted negatively for last couple of days post the earnings. Also, even today morning, if I'm not wrong, the stock has opened up negatively. Maybe per se because of the
Minus
global news.
4% at this, over
Yeah.
minus 4% this morning.
I think it's a classic case of buy on rumor, sell on news. Look, honestly, I think the stock rallied a lot because market and the streets were expecting healthy numbers, and once the result is out, I think the street is just about consolidating on the stock, and it's a classic case of, as I told,
Profit
buy on
booking.
rumor and sell on news. Yeah, yeah.
Right. All right. Yes, Yash.
So, Mohit, the concerns raised by the management of yields, which could, negatively impact profitability, and even it could post a loss in the upcoming quarter. How big of a concern is that, and is that the reason why the stock has taken almost a, a 4.5% decline today?
Oh, look, honestly, I think management commentary matters a lot, but I think overall the commentary has been positive. If I was hearing the CEO maybe yesterday or today morning, I don't recall, but he was quite upbeat that they will manage the margins and they will manage the profitability and the overall growth, and in terms of sectors which they're opening and other things, adding fleet and so on and so forth. I think they're doing good. Plus, as you rightly pointed out, Shreyash, while you spoke about the numbers, that the overall growth or the travel industry in India has been booming. Look left, right, and center, and it's no surprise. You and I, when we travel to the airports, we can just see the buzz and we can see the number of flyers and we can see how the footfalls have increased overall, right? So that overall segment of travel, tourism, not just work travel post COVID, but also the leisure travel has increased many folds. And I think Indigo is a direct beneficiary of that. As I told you, it's a duopoly industry. There's no direct competitor as of now, honestly, and SpiceJet is where it is. So I see a lot of positive growth coming in. It's just that the global situation and the crude situation has to be monitored very closely for one to be very clear while betting on the stock.
Right, Mohit, appreciate you taking time out and for joining us this morning. Quickly, before I let you go, what are the other results that we'll be tracking today?
So Shweta, one of the biggest results, at least from the Nifty pack, is going to be Bharti Airtel. So Bharti Airtel is expected to, post a healthy set of numbers. We have got the expectations of Bharti Airtel, if we can pull that up. Yeah. So on a quarter-on-quarter basis, the growth will, however, be flat. Now, Bharti Airtel has various verticals. It has its Africa business, it has its home business, which is the D2H connection, the enterprise business, also the India mobile business. Now, India mobile business is expected to, at least the revenue is expected to grow by about 3%. Now, the revenue will be a function of two things: ARPU, which is the average revenue per user, which is expected to grow to about 198, a sequential hike of about 2.5%. Now this will be based because Airtel, if you remember, earlier in the year, had cut down its the lower tariff plans. Now the lowest tariff plan that you could avail is cost you about $150. So now that should have a positive impact on ARPU. And another thing to track would be the subscriber additions. Now we have some data from TRAI which suggests Bharti Airtel added 1.5 lakh subscribers in April to May quarter.
Right. So Bharti Airtel numbers, of course, will be tracking. Adani Enterprises, another story that will be tracking through the day. Appreciate you, Suyash, for taking time out for joining us on that very crucial story. We of course continue to track all those big numbers as and when they come in. But another story that we are tracking, and that is by the way of GST numbers. Joining us at this point in time is Avijit Ghoshal of TV9. Avijit, good morning. Thanks very much for taking time out. GST Council, the 51st GST Council meeting yesterday did not surprise anyone. They reinstated that 28% levy on gaming companies will continue, but at least some clarity on what happens here on.
Yeah, absolutely, Shweta. I don't think it was left to anybody's guess that the 28% GST will be retained. But the real point of interest I found was that the finance minister saying that 6 months on it will be reviewed. I think that's a very positive development. And I think despite the entire brouhaha that the online gaming industry had raised after the announcement of the 28% GST, the government really dug in its heels, and there was really not a chance that they could budge after taking such a publicly entrenched position. So, but I think this review after 6 months gives a lot of window. Now, The other thing that one has to look out for is the date of implementation. Now one gets to hear that 1st October may be the the date of when the GST will kick in. But here the point of interest is, see, the festive season is starting. The entire, if you look at the consumer durables market, they are agog that this festive season people will really, open their fists and spend a lot. And if you see the nature of the industry, online gaming, that really triggers a lot of expenditure tendency. So people really want to enjoy, and this is definitely a part of that enjoyment experience that one looks for in a festive season. So the government will definitely look out for numbers. How much does it play up? I mean, if the people really spend a lot, if the numbers are good, if the government really gets a lot of money, I don't think 6 months down the line the government will really take a chance and again reduce perhaps the GST rates. So
Okay.
it's very important to see, to my mind, how much the government really nets during the festive season, which will last at least till January, if not more. And
All
then
right.
the fine tuning will start, 6 months later perhaps.
Fine tuning will start 6 months later. Of course, gaming companies will watch out for that. But GST Council very firm on its decision of a 28% GST levy, which starts 1st of October. Another important story that we are tracking and moving on from here is that of Tesla. Amit Ranjan joining us here in the studio. Amit, Tesla has started leasing office space even as the EV game in India is heating up.
Yeah, so they have a new address in Panchsheel Business Park in Pune.
Okay.
And
There is
it is a prime
location.
location. They have leased it for 5 years, 1,500 square feet of property. So they are serious about what they are doing with India. EV space is in for Foxconn and Tesla, as we mentioned yesterday. Big players coming in.
Big players coming in. Let's quickly also talk about Foxconn. Foxconn there is also in fact making strides. They will also come up with an EV very, very soon. So Tesla and Foxconn both going big on India.
The EV plant they are looking for at is in the state of Tamil Nadu.
Okay.
But they are going to additionally invest $600 million in their chip making semiconductors facility, additional facility, which will employ 13,000 more people in the state of Karnataka. They have already invested 14,000 crores in the state of Karnataka. So this is in addition to that. And this is part of their broadening strategy away from China in the semiconductor business. So big things happening in the EV and semiconductor space from big players. Foxconn, Winstron we spoke about. I'm sure we'll get news about Pegatron, which is the third one in India in the days to come.
But Foxconn there, as you can see on your screens, investing more now in Karnataka. It has already invested 14,000 crore. This would be an additional 5,000 crores on the back of a facility to manufacture iPhone components. So that of course is the big semiconductor chips components. That of course is the big thrust. Amit Ranjan, thanks very much for joining with your inputs. I want to also quickly go to my colleague Avijit Ghoshal at this point in time. Avijit, this is a great strategy of course that Foxconn is adopting. The strategy is that of trying to build an ecosystem. So it's not just facilities to manufacture anymore. It's their bid to build an ecosystem, so build everything from a semiconductor facility to build a component manufacture facility and so on and so forth.
Yeah, absolutely, Shraddha. I think that should be the strategy of each and every player who wants to really bet big on this country. Build an ecosystem that's long lasting. See, here I might flag this news about private mining of lithium being explored. So, once this also, I think, dovetails into this entire strategy of the government to help build in this ecosystem. Now, what is lithium needed for? Lithium is needed for all sorts of batteries that surrounds our world, from laptops to gaming devices to phones to everything, and even electric cars. So lithium is an essential component of these batteries. And this entire ecosystem without battery doesn't really work. It's so critically dependent on batteries that this, as you were saying, this building this ecosystem, I think this is the right strategy. Both the government and the private players, they should join hand and work together, building a comprehensive ecosystem that points in one direction, that's facilitating the ecosystem further to attract more private players who can benefit from an ecosystem which is already functioning in this country. So I think that's excellent.
All right. So it's a good, great dichotomy between the government and the private players, and we'll have to wait and watch out for that. But since we're running out of time, another very interesting story that my colleague Shaumalo Shantikari is tracking, and that is by the way of BCCI media rights. The tender is finally out, Shaumalo.
Yes, the world's richest cricket body has finally released its tender. It is running behind a bit schedule because of the proposed Sony Zee merger. So there were talks that the BCCI was apprised of the situation and knew the market conditions, because last time around it reaped a windfall because of favorable market conditions and the favorable sporting rights ecosystem that was going through. I mean, it was a pre-COVID period, and Star had paid over the top for the rights cycle, which is right now, if I may say so, the stars are not that aligned for the BCCI at this moment, because it is looking to see the rights value double, but in the present circumstances with Star not really getting the required financial support from Disney, considering that it is cutting down on costs, and Sony Zee merger may also take some time, at least another couple of months or more than that, and the only player that is left is with deep pockets is Viacom 18, which is really going out all guns blazing, considering snapping up sports rights across the subcontinent. So in that case, there are reports that the BCCI reached out to Amazon and Google, but I mean, considering that it just released this tender yesterday, these are reports that come out to ensure that there's a favorable environment. But this time around, I think, as I said earlier, the stars may not be that aligned for BCCI if it is looking to reap a windfall.
So what sort of windfall is BCCI looking for? What was the figure last time around, and how much revenue is it hoping to shore up this time?
Last time around, it was 6,138 crore for both domestic, for both TV as well as digital. This time around, it is looking at doubling it, but I doubt, and there may be a correction if my mistake might neck out on this one.
How much correction approximately?
10%, if I may say so, but you never know. In cricket, I mean, there have been instances where people have surprised with their bids, and the exuberance has always sometimes got the better of broadcasters, who have always wanted to get the showpiece rights to ensure, if not for economic sense, for the prestige sense, or for the commercial uniqueness of this property. Because cricket is a religion in India.
Cricket is religion in India, and players might end up surprising BCCI, and people and industry watchers at large. Will bring you more on that story. But unfortunately, we've run out of time on this show. Gentlemen, appreciate you both taking time out, and my colleague Avijit Ghoshal for joining us all the way from Kolkata. Thank you very much for your time, sir. And with that, it's a wrap on this bulletin. Thanks for watching.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first? So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia, and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime, and probably of him personally. So he has to keep going.
Year 2, no end in sight. Streaming now. ChatGPT. It can generate codes and human-like responses through text, write stories, and do a lot more.
I work in a newsroom with anchors,